The broadcast is now starting. All attendees are in listen-only mode.
Hey everybody, welcome to our webcast today on how to be more competitive in the GovCon market using the 2019 Gauge Report. My name is Kim Koster and I'm joined today by Rich Wilkinson. Both of us have a long history in the government contracting space, and we look forward today to sharing insights from the Gauge Report as well as some of our own insights. So just a quick set of housekeeping items. You'll receive the presentation along with the recording within 48 hours. If you have questions or comments, please put them in the question console and we'll respond to you individually after the webcast. We're also asking poll questions, and we hope that you will participate in those. It really gives Rich and I insight on our audience so that we can tailor our comments to the folks we have on the line. All right, so let's start with our agenda. So this is what we're gonna be covering today. What is the Gauge? The benefits of using the Gauge report. We're gonna have lots of statistics on the respondents. We're also going to talk to you a little bit about some of the top contracting tips, and I'll tell you a little bit about more of how that's displayed inside the report. We'll also be looking at key items like FTE, wrap rates, and project management tips. And then we're also gonna tell you what's in store for the Gauge 2020. All right, so take a look at the optimism. The level of optimism is just running rampant within the government contracting marketplace. So 70% were optimistic that the market was going great, 18% neutral, and only 12% were pessimistic. So just think what this number would have looked like if the survey had not been open during the longest shutdown of our government ever. So there's a ton of stuff to be excited about. So what's the Gauge and why do we do it? It is a fact-based government benchmarking survey, and then the result of that survey culminates into the Gauge report. Then we break that information down by revenue band, which you can see over on the right. And then the Gauge itself, the report itself, is broken down into 5 sections or chapters. So we have government contract compliance, accounting, utilization, growth, and efficiencies. And of course, that spells the Gauge. Now, you may be asking yourself, why do Unanet and CohnReznick actually do the report? First, we really want to give back to the market we serve and the market we're doing business with. The second is to give our customers and prospects a tool to measure themselves and really to help them be more competitive. And the third reason is to drive solutions to challenges that we see in the report into our product and services. Now, what really differentiates the Gauge report from other benchmarking surveys is the theme. So in 2017, we had a budgeting strategies theme. 2018, it was small to large or sub to prime. And in that report, we also had some information around the business system audits. So, really great data in there. And then in 2019, we had internal controls best practices that were spread throughout the entire report. Now, this year, we're going to, in 2020, we're going to talk about and have our theme be efficiency through technology. And I think this is very timely with the NIST requirements and then concentration on technology to help you achieve your business goals and win more business. And also this year, we did something really unique. We came up with 100 top tips for government contracting, and there's 100 tips spread throughout the different chapters in the report itself. So let's level set on what exactly benchmarking is. So really, benchmarking is looking at others' performance, their expenditures, policy, strategies, and then comparing them to your organization. It's a great methodology to look both internally and externally to see what other folks are doing to be successful. Now, internal benchmarking across divisions, departments, or portfolios, it can be very helpful, but honestly, it's not as common practice as you might think. We've done this presentation multiple times now live, and I always ask for a show of hands of the people who are benchmarking internally, and I get 1 or 2 people who raise their hand. So, I wish I could see you guys, but I can't. So maybe a couple of you are raising your hand. And then when I ask if they're benchmarking externally, the whole room raises their hand. So unfortunately, many companies are still very siloed. They've got varying processes, procedures, and disparate systems that make the exchange of information difficult, and honestly, it's very expensive to put the information together. So external benchmarking can be very powerful and there's no prep or manipulation of the data, ultimately saving you a lot of time and overall money. Now, why is benchmarking externally so important? You know, in this case, it gives you a perspective of the overall GovCon marketplace. It's going to give you an understanding of what others are doing to be successful. It's going to give you ideas for improvement and really get your creative juices flowing. It's going to make you more competitive, and it's going to help you win more business and grow your organization, which is what we all want to do. So now this is just who responded. So we had over 1,250 contributors to the survey this year. First, we'll start off with who responded by annual revenue. You can see here, we broke this out in a little bit more detail. So just to show, we had a particular point that we wanted to show here. So 14% were under $1 million of annual revenue. So that's telling you that there's a lot of new and emerging companies in this marketplace. And it's going to correlate very well. Keep that in your mind, because it's going to correlate very well with being a big concern that are keeping people up at night is competition, and we'll be talking about that in a bit. Now, what was different this year was the number of larger companies that we had. We had 24% of 100 million annual revenue and up. Now, we also asked, what's the title of the respondents? So who are they? 53% of them are C-suite, so CFO, president, or really other CXO. 17% were other management positions, and then 30% was other. That's the green section, and that's project managers, risk managers, accountants, project controls. So definitely, with 70% of the total respondents being managers, we definitely have the voice of the executive reflected in the report. So Rich, I'll turn it over to you now.
Thanks, Kim. So just expanding a little further on who responded, government contractors self-identify with a primary NAICS code, and this is the breakdown of the kind of companies that responded. It's pretty evenly distributed across all of those companies' colors that you see. You'll see a few more in R&D, the turquoise blue, research and development in the physical engineering and life sciences, except for nanotechnology and biotechnology. And then you'll see a chunk of other, of course. You'll notice there's also 18% in engineering services, and that's the catch-all that so many government contractors identify in as engineering services. And you'll also see everything else from computer programming services to professional scientific and technical services. But then we ask folks, what kind of agencies are you doing business with? 41% said the primary agency they did business with was DoD. And of course, another 10% said it was the intelligence world. Combining those two, between DoD and intelligence, that's half of all of our respondents. About a quarter of them said that they were doing business primarily with civilian agencies, and 16% said they were commercial. Not sure who the other is. Could be nonprofits, could be NGOs, could be a number of other possibilities, even in educational institutions, for example. Next. A few interesting stats on the respondents. We asked also if they received awards by virtue of a set-aside, and 52% indicated that they were eligible, whether they are getting a significant amount of awards or not, as small businesses. Another 18% said women-owned. You'll notice a significant chunk there of service-disabled veteran-owned small businesses. That's the single large, fastest-growing segment of the set-aside world. On the right-hand side, you'll see some bars here for contract types. And you'll notice that the contract types, while there is a little bit of what I call jitter in the data from year to year, the basic proportions of fixed price to time and materials to cost plus has not changed much over the last 3 years from our respondents. And that brings us to our first poll. We'd like to know a little bit about you. So how about telling us your annual revenue size? If you're less than 10 million, select one on the poll. You want to run the poll, Jess? There we go. Select the first one. If your annual revenues are between 10 and 50, select the second one. Between 51 and 200, select the third one. And if you're one of those companies that's greater than 200 million a year in revenue, go ahead and select that last one. We'll give you just a minute.
So, Rich, we saw that huge uptick in people entering the marketplace. Do you think we're going to continue to see that this year?
Yeah, the whole government contracting market space is self-renewing, and Defense Logistics Agency is going to spend tens of millions of dollars again this year supporting Procurement Technical Assistance Centers, PTACs, across the United States. There are 96 of those, and they exist solely to assist small businesses in entering the government marketplace. I don't see any downturn in that. The mentor-protege programs continue to expand. And again, the sole purpose of those mentor-protege programs is to assist small or small disadvantaged businesses in beginning to do business with the government and doing it more effectively. So I don't see any abatement in that growth in that segment of the market space.
Okay, Jess, you got the answers for us?
I sure do. Let's take a look here. So it looks like we're 52% are less than 10 million, 41% are between 10 million and 50 million, 6% are 51 million to 200 million, and then we have 1% that are greater than 200 million. So spread.
Well, that tells us right where our audience is, doesn't it, Kim?
Absolutely.
So let's talk for a couple of minutes about compliance. Now, compliance is kind of my arena. I've been in this part of the government contract space for almost 40 years now. We ask our respondents to tell us the DCAA types of DCAA audits they had encountered in the last year. 33% said that the incurred cost submission was their primary audit with DCAA in the last year. And then you will see everything is just all over the map. The only real segments of that pie that are significant beyond the incurred cost submission were forward pricing, pre-award surveys, and accounting system examinations. Now, the pre-award survey and the accounting system examination could be lumped together. That's 21%. With those two, because those are two versions of the same kind of audit. The pre-award or the forward pricing typically is part of the competition process where a contracting officer is asking for DCA to examine a proposal and comment on realism or some other aspect of the pricing. So compliance trends we expect to see. We pretty much expect to see a balance of all kinds of different audits, but DCAA seems to be turning their attention toward business systems audits. TINA audits are a fact of life. They happen. Cost accounting standards examinations are also kind of a fact of life for the larger companies. But in the market that we're talking to today, pre-award surveys are probably the number one thing beyond incurred cost submissions that you can expect to see out of DCAA in the next year or two. So we also ask our respondents to rank their top compliance challenges. Now, they ranked them 1 through 6 and indicated the top 6 of their choices. And what we've done here is take the first, second, and third choices and add them together and then rank the responses on this chart. As you can see, if we add the first, second, and third choices together, rates, indirect rates in this case, turns out to be the number one compliance challenge for customers. And of course, that relates directly to that incurred cost submission and its audit. Billing was the second ranked response, and timekeeping the third. by the way, these 3 items have been in the top 10 and usually the top 4 or 5 for over 20 years. It just doesn't change that much. What is a little bit unusual to me is that executive compensation is starting to bubble up into the top 5. It was a really hot topic 6 or 7 years ago, or a little more, and then it sort of died down, and now it's beginning to come back to the forefront. And of course, unallowable costs are always in that top 10 section. We also ask about incurred cost submissions, because one of the things we hear from our clients and our prospects more often than anything else is that incurred cost submissions, first of all, they take forever to get DCAA's attention to them, and second, they take forever to complete. So we ask them, tell us what's delaying completion of your incurred cost audits. And we got 2 responses that were just seemed to be the same thing at first. You see auditor delays and government delays. And the question was, well, aren't those the same thing? Well, auditor delays seem to be a resource issue with DCAA. Just not enough people to do all the audits that need to be done. That government delays thing, that was the shutdown. Because when the government shut down, the DCAA auditors laid their pencils down, packed up their briefcases, and left contractor facilities, and they didn't come back until the shutdown was over. Now, if you've ever had an audit interrupted midstream and have them completely shut down and then have to come back, you know that restarting an interrupted audit takes just as long as it does starting it from the beginning. So that really delayed things in the last year. And the lack of internal resources, I think, is 2 pieces. One is it's really hard to turn all your time and attention to supporting auditors when you have the daily work of supporting your company to contend with. Everybody has a day job, and some of that incurred cost submission support tends to get done on the night shift. And the other one was simply that it only happens every year or 2. In fact, a lot of companies will experience an incurred cost audit every 3 or 4 years, and DCAA will come in and audit 3 or 4 years at one time. Well, you never get particularly good at something you only do every 3 years. Think about it. So supporting that audit involves a learning curve every single time they come in because it's so long between audits. So some tips that have come out of our experience so far. Try to stay current on the FAR and NDAA changes. Now, FAR and the DFARS regulation tend to change on a geologic time scale. I think it seems sometimes that crustal plates on the Earth move faster than FAR changes and DFARS changes. But the NDAA can slip in surprises on us from time to time. It's kind of important to keep up with that. If you belong to an advocacy organization like perhaps the Professional Services Council, they're really good at tracking those things for you and letting you know when something's going to impact our market segment. Understand your record-keeping requirements from FAR Part 4. The record-keeping requirements aren't necessarily what you would expect, particularly in the commercial world. So government record-keeping requirements are different, and they require us to keep things longer than commercial companies or the IRS would ever do. Pay attention to document closeout processes and any negotiations that are held at closeout, because you aren't just closing out a contract, you're making agreements and concessions that can be used to close out other contracts. So keep that in mind as you agree to things in closing out a contract. With respect to DCAA, if you're about to undergo an audit and it's not an audit that you see frequently or you're really familiar with, go to dcaa.mil. Now remember, it's a military organization. It's part of DOD. So go to dcaa.mil, not .com or .org or .biz. There are DCAA websites out there other than DCA.mil, but they're not the real one. So go to DCA.mil and download the audit work program for the audit you're about to undergo. It's really good to be able to anticipate what DCA is going to ask for and what they're going to do with it before they do it. Make sure that when DCA comes in to audit you, you hold an entrance and an exit conference. You are entitled to those things. If DCA comes in and says, well, we're going to hold an audit, but you don't get an entrance conference, we'll tell you what we're looking for when we ask for data. Just escort them back to the door, because you should know when they come in what it is they're going to audit and what work program they're going to execute. And if they get too far afield in that work program, call the regional audit manager, the RAM, and ask what's going on. If you don't know who your ACO is, and an awful lot of people don't, check and find out. Your ACO is an important part of your business, and it would be a really good person to hold, to know, and have a relationship with. So compliance considerations for the upcoming year. DCAA now claims to be in full compliance with the NDAA requirement of a couple of years ago that insisted that they get current with their incurred cost audit backlog. I'm not sure I believe that, but they say they are, and so DCAA is once again working for the civilian agencies. If you work for a civilian agency, if they are your primary customer, keep in mind that you could see DCAA coming in to audit you again. They couldn't do that for a couple of years, but they are now. DCAA publishes a report to Congress every year, and they put it on their website. It typically comes out early in the year. By the time we see it, it's a couple or 3 months old. But in February or March each year, you'll see their report to Congress appear on the website. Cybersecurity is certainly top of mind right now, and with DoD's new CMMC maturity model and the insistence on a certification, man, is this going to be another debacle, in my opinion. Now, my opinion, and $5 will get you a cup of coffee at Starbucks. But Kim asked me the other day when we went through these slides, why isn't everybody all up in arms about this cybersecurity business? And I told her, I think it's because they've been numbed by DCAA's year after year after year pushing out the deadlines. I mean, we saw NIST 800-171 come into being, what, Kim, 6 years ago now, 7 years ago?
Been a while.
Every single year they would set a deadline. You got to be compliant by this date, and the date would come and go and nothing would happen. Solicitations would come out, there's no mention in it, and they would set a new deadline. I think that this new certification, cybersecurity certification requirement is going to be very similar. Right now they've set this thing up for failure, in my opinion. The requirement is for 30 or 40,000 companies to be certified in order to bid on DoD work. And by the end of the year of 2020, everybody will have to be certified. Now there's 5 or 6 levels, but as I pointed out to Kim the other day, there is no level 0. So there is no work that you could possibly do for DoD, even cutting grass or striping the parking lot outside a government building, that won't require some level of cybersecurity certification. That doesn't make sense to me, but they didn't ask me. The 809 panel made their suggestions. The 809 panel made a bunch of suggestions that, quite frankly, didn't have any relationship to the real world. And as a result, not much has happened. The suggestions are definitely stalled. Why is just conjecture. Lack of funding, maybe. Not knowing how to implement some of those suggestions is a even more likely reason that some of those things are stalled. Other transactional authorities is still a really hot topic. Congress is beginning to get involved in that, and the articles I read just as recent as yesterday seem to be saying that Congress' approach to OTAs is simply that it's another way around the FAR. And if that's their attitude, you can see OTAs being scaled back. However, OTAs are getting a fair amount of money. The Pentagon reported $7 billion in F-19 obligated against other transaction authorities. For those of you not familiar with OTAs, an OTA is a document, it's a procurement instrument, but it isn't a government contract the way we think about them, and it is not subject to the FAR. That gives certain congressional committees a little bit of discomfort. So we'll see what happens with those. And that leads us to poll number 2. Yes?
So what are your compliance challenges? Is it rates, billing, timekeeping, executive comp, or unallowable? So, Rich, what do you think it's going to be? I've got my opinion, but I'm going to ask you first, and then I'll give you mine.
I think it's going to be rates. Rates is always the #1 compliance challenge.
Well, it's always, it has been lately, but remember back in the day when it used to be timekeeping. Timekeeping was always the #1 challenge. So it's kind of interesting to me that it's switched over the years.
You know, I think that's technology.
I do too.
Technology has made timekeeping easier. It's made it easier to be compliant and easier for a company to monitor that compliance. And it certainly made it easier to nag people. I don't know about you, but I get one of those, you haven't entered the expected time on your time card for yesterday email pretty regularly, much
Every
more
day.
than my boss would like. So when you make things easier, then I think the emphasis is shifted to other areas.
I agree with you on that one, but it's interesting because timekeeping should still be something that everybody's got top of mind. But hey, Jess, what does the poll say?
Let's take a look. All right, so rates came in first, 62%. Kim was right with number 2, timekeeping, 17%. Billing was 11%. Unallowables was 8%, and executive compensation was 3%. So again, big spread.
Well, you know what they say in Vegas, Kim, the race is not always to the swift nor the battle to the strong, but that is the bet.
Well, I'm glad you won. But timekeeping did move up according to, as far as challenges in this poll compared to where we were on the Gauge report. So that's
it did, didn't it? Well, let's talk a little bit about accounting. Cash is certainly king in our business. You know, we don't make money at the bottom line. We make money on turnover, return on investment, not return on cost. So to the extent we can turn our receivables over faster, we make more money. And we have to borrow less. So there are a number of things that influence days sales outstanding, but we can't do anything about how long it takes the paying office to pay a bill. We can do something about how long it takes to get an invoice out the door. So that's what we ask people about. How long does it take to get your invoice out the door? And this is from the cost being available to bill to the bill going out the door. 28% told us they averaged 5 days or less. 35% said 6 to 10 days. Another 23% said 11 to 15 days. And then you can see there a few respondents said more than 15 days. And when you trim a day off your invoice cycle, you also trim a day off your day sales outstanding for the most part. So we asked people, how long is your day sales outstanding? And 28% again told us 15 to 30 days. And I would be willing to bet that that same 28% is the 28% that told us they had the short invoice cycle. 42% said that their DSO was from 31 to 45 days. And then it went to 25% from 46 to 60. And only 5% said that their DSO was more than 60 days. Now, if your DSO is 60 days, you're only turning your receivables over 6 times a year. And that's not great. The next thing we turned to was mergers and acquisitions. So we asked people, do you plan to buy a company or sell your company in the next 12 months? And about a quarter of our respondents said, yeah, we're looking to buy a company. We're in the acquisition market. Only 6% said that they were looking to exit. They were looking to sell their company. And 69%, well over 2/3, said, nope, we're not in the mergers or the acquisition market at this point in time. So if M&A is a possibility for you, what controls should you be looking at? Well, anytime due diligence takes place, the investor is looking at the target's controls on financial processes, IT, third-party onboarding process, and regulatory compliance efforts. Now, certainly the financial processes are very, very important. I wonder about the order of these. They may not be in order of importance because that regulatory compliance effort is a big piece of M&A for GovCons.
Yeah, one thing, Rich, I want to point out, when the folks look at this little internal controls tip right here, that tab is on all the internal control tips throughout the report. So if internal controls is important to you, you can just thumb through the report and you'll see that little internal control tip on all the sections that talk about that.
So a few more tips, this time oriented toward the accounting world. Understand ASC 606, and if you're not familiar with ASC 606, that is the long-awaited new revenue recognition rules. I'm not even going to attempt to explain 606 in 20 words or less because I don't think it can be done. Suffice it to say that it will have some impact on the GovCon world, but not as much as it's having in the commercial world. You do have to understand it and comply with it, though, if you need GAAP financials. EBITDA, earnings before interest, taxes, and depreciation and amortization.
Mm-hmm.
It's critical that I remembered what that stood for.
I was surprised. Good job.
Understand it, create a goal, have a goal for EBITDA, and measure against it. It's one of those metrics that, particularly if you're looking at possible M&A, it's one of those metrics that actually matters. And finally, have an ERP system that handles cost pools and allocations. Allocating cost and doing it on a reasonable, realistic basis, it can be a real pain if the system doesn't do it for you. Now, if you can set your system up to do it, have it create those allocations for you automatically, that's wonderful. If you have to do it by hand or in a spreadsheet, and then reflect the effect of those allocations in your books with a journal entry, that's very time consuming and even more error prone. Business systems continue to be a big issue particularly for defense contractors. You know, DOD identified 6 business systems I think it was back in 2011. Seems like just yesterday. And 3 of those systems are financial systems: accounting, material management accounting, and estimating. And auditing those 3 financial systems is still a big piece of what DCAA does. You should have policies and procedures because that's what DCAA looks at first with a system. They look at policies, they look at procedures, then they look at, do you actually do what you say you do? And finally, they look at the tools. Now, I happen to think the tools that you use are very, very important, but the tools you use are important only because they save you time and money in doing the things that your policies and procedures say. The software tools don't determine what you do. They just determine how hard you have to work to get it done. Advanced topics. If you're going to make a change in your accounting practice, get help. If you're cost covered, you have to do a cost impact analysis. If you're not cost covered, you should do an internal cost impact analysis just to know what it's going to do when you make the change. I've had more than one client over the years that made a cost accounting practice change and discovered it didn't do what they thought it was going to do, and what it did do was not advantageous. So understand them before you do them. Get help on things that don't happen very often. I said this before and I'll say it again. You never get good at something you do once every 3 or 4 or 10 years. So if you have a termination claim or a cost impact study or a stop work order that causes you cost, get some help from an expert that handles those things all the time. It pays. A few accounting considerations for the upcoming year. The lease changes have been delayed yet again and won't go into effect until 2021. That's a whole nother topic for another webinar, but those lease changes had the potential to really upset the apple cart in the GovCon world, and they've been deferred yet again. That we talked about ASC 606 already. Revenue recognition for non-public companies is not going to have as much impact in GovCon as it is in the commercial world, but there will be some. You should have your trusted advisor, your CPA firm. We can recommend ones right there on the bottom of the slide. If you don't have one already, that's a good one to call, but understand what it's going to do. If you're going to make a change in your cost accounting practices, figure out what you're going to do and what is the effect will be before you do it. Plan for it, train your people, make sure they understand what they're going to do that's different about the new practice. Remote work policies are a way of life today, and we see DCAA asking more and more questions about remote work. Questions like, does your system monitor when your employees logged in and working or not, and things like that. I frankly think that some of those questions are rather intrusive, but it's very hard to get DCAA not to ask questions. And some of the questions they ask aren't very comfortable to answer sometimes, particularly with respect to the remote work policies. Recruitment is going to continue to be an issue moving forward, especially in the very, very tight labor market we're looking at. So retention is top of mind for an awful lot of executives right now. And that brings us to our third poll. So we're going to step back a few slides and ask you about your invoice cycle, because that's the major contributor to your days sales outstanding. Remember, we can't do much about how long the paying office takes. So what's your invoice cycle? 0 to 5, 6 to 10, 11 to 15 days, or does it take more than half a month to get your invoices out the door after the transactions become available to be invoiced?
So, Rich, we're definitely seeing these invoice cycles, this time going down, especially the last year or so. I think that's technology and people starting to use technology. Do you agree with that?
So do I. Yep. And we see DSO coming down faster than we see the invoice cycle coming down. And in my opinion, that's because technology not only helps us get invoices out the door faster, it reduces the error rate.
Yeah.
If you think getting an invoice out late kills your DSO, just let a great big invoice come back from the paying office rejected for some reason and see what that does to your DSO, especially if it's a big invoice and they don't pay much attention to the little ones. That has a bigger effect on DSO actually than the number of days it takes to get the invoice out the door. So yeah, I think technology is helping us reduce the error rate and reduce the invoice cycle.
That's a great point. All right, Jess, what you got?
Let's take a look. All right, looks this one's definitely spread all over the place. So 0 to 5 days is 23%, 6 to 10 days is 37%, 11 to 15 is 26%, and then more than 15 days is 14%. So a little full spread.
All right. Well, thank you, guys. Thanks for participating in these polls. Okay, so the next chapter we're going to talk about is utilization, and this is really about hiring and resource management. So we asked, hey, what are your workforce expectations in the next 12 months? 73% said that they'll hire. So that's the orange and the gold. But we also note that there's a STEM, a shortage of STEM and a shortage of technical talent across the board. So we are recognizing that we are continuing to have a talent crisis. And that's also going to be reflected in a chart I'm going to show you in just a minute of what's keeping people up at night. But the good news is there's lots of optimism, and you need to retain and get the best talent that you possibly can to be competitive. All right, we also ask, how mature is your resource management practice? And 49% of the respondents said that they were mature. Now, I'll be honest with you, that number feels really high to me. I don't know about you, Rich, but it feels high to me.
It does to me too.
Yeah, I know that there's still a lot of spreadsheets that are being used to manage resources. They're project by project, and they're definitely, those Excel spreadsheets are definitely in silos. So I think we really need to have a further definition of the discipline and really understand where companies are, because we do a lot of webcasts around resource management, and we do these polls, and when we do them, we're seeing that maturity level to be much, much lower. Now, one interesting thing, and I'm going to tie into this as far as resource management goes, which is really project management. So we had some really bright spots in project management, and we had some areas that needed attention. So I'm going to give you a stat, and I'm going to kind of say it slow, but 57% of our respondents reported that greater than 75% of their overall projects are on cost. At first, that sounds like a pretty good number, but the reality is there's a big number, under 75% total projects that are not on cost. So on the bright spot, we saw 69% that said greater than 75% of their overall projects are on schedule. Okay, so what that's telling me is that people are sacrificing cost and profit for schedule. So they don't want to have bad performance, and so because that would affect winning the next contract. So, that's something that can definitely be improved on in the coming years. Now, these are some of the most popular charts that we have in the report. So, and there's going to be two charts, they're back to back. So first, it shows the department, and then it shows the revenue scale, and then it shows the FTEs that are needed to staff each one of those departments. So, you can really ask yourself, hey, are you competitive? If you're a $20 million company and you've got 10 accountants, for instance, you may need to take a quick look at your organization. The other thing too is if you're a $20 million, but next year you're going to grow to be 45 million, you can kind of get an idea of what you might be looking at as far as hiring, what kind of FTEs folks within that range actually have. Now on this next chart, it's the same concept here with just different departments. And this year, if you go back and look, we've done this every year. So we've got it from 2017, 18, and 19, and we've added some new departments each year. This year, the new departments that we added were internal audit and in-house legal. Okay, and this is really a great way for you to see if there's any inefficiencies within your organization. All right, so this is one of my favorite charts, and I love to ask this because, what's keeping you up at night? And so, again, Rich explained how we were handling these. So we were looking on this one just at the first and second rankings. So recruiting and retention were number one. Okay, so that is definitely what's top of mind. It's the biggest issue. Coming in second was competition. But then if you really look at competition and you look at this dark blue bar, it's the number one. Okay, so competition really is important. It's something that you really need to be looking at, thinking about, and making sure that you're staying ahead of your competitors. And you can do that by performing, having great proposal prep, and then really keeping your cost in line. Okay, so here is our next poll. What's keeping you up at night? Is it competition, recruiting and retention, cybersecurity, the political environment, or operational efficiency? Rich, I'm going to continue to think that we're going to see recruiting and retention to be the biggest challenge. I think that's going to be the biggest challenge overall with everybody on the phone.
I don't know, Kim. Competition seems to always be front of mind to the people I talk to. But recruiting and retention is certainly a big issue right now.
And, you know, I'll be interested to see, you know, in the coming years, we just had that conversation about cybersecurity, but when it really also becomes top of mind here and really makes the score here. So, Jess, what you got?
Let's take a look here. All right, you guys are pretty spot on. So the big winner was recruiting and retention of employees at 33%. Woohoo! 30,
Interesting.
I know, right? 31% was operational efficiency. 26% was competition. 7% was the political environment, and then cyber came in last, actually, at 3%.
Yep. Okay. All right. So I'm just going to go over a couple of quick utilization tips. You know, invest in the wellness of your employees. You know, everybody says that they're the most important asset. They are your most important asset, and you need to keep your best people in order to remain competitive. You know, if you don't have a compliance officer, you know, think about getting one. It's money well spent. And do invest in training. Perform training for your teams in the areas of project management, annual code of conduct, conflict of interest, and definitely unallowable training. And don't forget that all-important timekeeping training. You know, and make sure that you're reviewing and updating your policies and procedures, and then training the organization on those policies and procedures. Just some additional considerations for the upcoming year. On page 18 of the report, we had 8 strategies for resource management. Be a great way to go back and, you know, kind of refresh get some creative juices flowing and think about ways that you could improve your project management, your resource management discipline. And then do focus on project management and then delivering your projects on time and on budget, because that performance of your project, it really does affect your future wins. There's another great benchmarking report. I love it. It's the Pmi Pulse of the profession. You can get it for all the different years. It's free. It's out there on the web. Just search it. And it's got some absolutely wonderful information for you. All right, our next chapter is growth. Now, we asked our respondents what their biggest financial challenges were, and they told us that federal spending was #1, but a very close second was organic growth. So we're really seeing great growth numbers. Now, the growth numbers on this side are 2019. 59% had growth rates in excess of 10%. And as this year goes on now, we're almost done with it. I can't believe it's almost Thanksgiving, but it's happening. You can now compare your growth rates to these numbers for 2019. For 2020, we have the projected growth rates here, and if you look at the orange and the gold portion of it, you can see that 72% think that they're going to grow more than 10% in 2020. Again, this kind of optimism continues to run through the report, and it'll be interesting as you go through your budgeting cycle. You can go back to this report and take a look and see what you were projecting for 2020. Now, this table is about win rates, and it shows the win rates by revenue band. And so smaller companies are definitely struggling to win in excess of 50% of the time, but the folks over $101 million of revenue are much more weighted towards the 50% win rate. Now, because they're really more mature, they've got a more mature capture process, and they're probably being more selective in what they bid. Now, if we look at all revenue bands, which is right here, 31% were winning more than 50% of the time, and that is up from 5% from last year. All right, so Rich?
And this title on this slide really says it all. Growing takes money. Almost everything we do in GovCon takes some kind of investment. So we asked people what their profit rates were, and a few companies reported astronomically high profit rates. Now, in the commercial world, greater than 20% wouldn't be considered astronomically high. In GovCon, that's certainly way above average. 8% reported 15 to 20%. The vast majority of our clients were in the under 14% category, either 7 to 14 or 0 to 6. I'm hoping that there weren't any below zeros. There weren't any reported anyway. On the right-hand side over here, you'll see bids. We asked people whether they were seeing more, best value or LPTA bids. And you can see the relative bars there. I had an opportunity not too long ago to talk to an old friend who just retired from the Secretary of the Navy's office in a procurement role. And I asked him when the pendulum was going to swing back to the other side. And he told me two things. He said, first of all, you don't want that pendulum swinging back because they never stop at the bottom. They always go too far the other direction before they come back. He said, second, that LPTA pendulum is nailed to the wall on the side of LPTA, not because LPTA saves money or gets the government better prices, because it's workload. When I do an LPTA procurement, he said, I only have to read one cost volume and one technical volume, and if that technical volume is acceptable, I'm done. And the award will be almost protest proof. He said, when I do a best value, if I get 30 proposals, I have to read, rank, and contrast 30 technical volumes and 30 cost volumes, and then make a judgment call that's almost certainly going to be protested. He said, in that environment, LPTA is here to stay until the Department of the Navy gives me another 1,000 people in the acquisition workforce. Unfortunately, that's not happening anytime soon.
All right, well, thanks, Rich. So just a couple of tips on growth. I would tell you to definitely concentrate on your pipeline management and then have a capture process, no matter how simple that capture process might be. And watch your pipeline very carefully. And I would suggest a cadence where you're reviewing it and where you're keeping it up to date. And as we near the end of 2019, whew, I can't believe it, you know, and be thinking about your upcoming budgeting cycle, and you can always refer back to the 2017 Gauge report for some really great budgeting tips. Another couple of things here, growth considerations for the coming year. The DoD is a great place to look for opportunities, but do take a look at the civilian agencies. You also may want to take a look at your business systems. You know, we've seen scoring criteria like in OASIS, where having more mature systems was definitely an advantage. Okay, so this is our last polling question. What do you project your 2020 growth to be? Less than 0, 0 to 9, 10 to 24%, or 25 to 50%? Hey, one thing, I know as you're taking the poll, but one thing I was going to tell you, if you want some deep dive information, please feel free to either put it in the question console, and I would send you that with your email. So we've got detailed information by revenue band on growth, we've got it on DSO, invoice cycles, and I'm happy to send that to you. So like I said, put it in there, or in a minute we'll show you our emails, and you can ask us for it from there. All right, so Jess, what's the answer here?
All right, let's take a look. Probably pretty much what we would expect. The biggest band is 48%, which is the 10 to 24% range. Second came in at the 0 to 9% range, with 44% of you responding. I'm loving you guys who were in the 25 to 50, the 7% of you. That's excellent. And then 2% were less than 0, so a full range.
Awesome. Okay, so we are on our last chapter, which is efficiencies, and I'm going to start off with the efficiencies and then turn that over to Rich. So we asked what the biggest challenges were for project managers, and this year, forecasting and budgeting displaced the inexperienced project managers. Okay, so inexperienced project managers have been the largest challenge for years. You know, quite frankly, I never really understood that, why it wasn't forecasting and budgeting, because forecasting really and budgeting affect the entire organization. It touches every single department and every single project, whether it's direct or indirect. And I just want to tell you, on the resource page within Unanet.com, you can find white papers and blogs on really how to forecast and budget more efficiently. Resource management, we discussed that earlier, should be an emerging discipline. To me, it's one of the most critical things, especially with, you saw the NAICS codes 541, those are all, you know, services type companies. So, you know, I hope that you'll dig into your processes and really look to resource plan at the enterprise level going forward. So, Rich?
Thanks, Tim. Let's talk about indirect rates for a minute. The number one thing I'll tell you about this chart is that you have to study it to figure out what's going on here. So what I'm going to do is invite you to visit our website and download the entire gauge report. This is just the graph for indirect rates for companies up to 25 million. There are other revenue bands, graphs for other revenue bands shown there. What this tells you is fringe rate varies, but not widely. It ranged from around 30% to 41%. Overhead rates on contractor sites varied a good bit more than that. Overhead rates on government sites, look at that one, really dramatic swings there. Subcontractor material handling rate, some swings, but all of them under 6%. And then G&A from less than 10 to over 21%. So benchmarking yourself against other companies only makes sense if you're in the right band, and that's going to be in the gauge report itself. So take a look. Oops. Tips. Take a look at your contract profitability and your indirect rates on a regular basis. I talked to a company the other day. I asked them when they looked at their indirect rates, and they said, well, their CPA firm calculated it for them twice a year, mid-year and at end of year. And I couldn't help but think, oh my, that's like flying blind, you know, just completely flying blind. Know what your rate variances are and be prepared not to collect those rate variances. It's getting harder and harder to collect rate variances in today's world. So make them go away so you don't have to collect them. Periodically review your indirect rate structure, and the number one thing everybody's looking at right now is should I have a subcontract and material handling pool? Ask your trusted advisor if your subcontractor content in your total cost is of sufficient volume that you ought to be thinking about a subcontract and material handling pool. That last bullet there in the top section, don't overcomplicate the rate structure. Yes, it can become difficult to manage, but just as important, very small pools are extraordinarily volatile. And while a very small pool can only affect small contracts, it can give you a bad name in the industry. You only have to have one rate with a huge rate variance to give you a bad name with an agency, even if it's a small contract. With respect to flow down clauses, know which ones are mandatory flow downs. Don't waste time trying to negotiate them out, or if you're a subcontractor, or change the basic functioning of that clause. If it's a mandatory flow down, you aren't going to be able to do that. But also, if you're a prime, know your responsibilities for your subcontractor's performance, particularly with respect to things like the Service Contract Act. That one is uncharacteristically rearing its ugly head right now. It normally doesn't very much during a Republican administration. It tends to have a resurgence during a Democratic administration, but for some reason, unknown to me, the Service Contract Act has become a hot topic at the Department, the Wage and Hour Division of the Department of Labor right now. If you don't know what your wrap rate is, talk to your trusted advisor, calculate that wrap rate, and understand what it does for you. It's a very important shorthand for what do I have to sell a dollar's worth of labor for to make a profit. If your wrap rate's 2, then you need to sell a dollar's worth of labor for $2 to break even. If it's 3, you need to sell that dollar's worth of labor for $3. Understand what your wrap rate is and what it means to making or losing money on your next bid. Look at your actuals versus your provisionals. Understand that rate variance may or may not be collectible. If you don't know whether your rate variance is likely to be collectible or not, get some expert help. Again, talk to that trusted advisor about those rate variances and what they're really worth. Don't get in a position of having taken rate variances to revenue and then have to write them off later. invest in some of those tools that we've been talking about to help you with some of these things. Kim, wrap it up for us.
Well, as you can tell, optimism abounds within the report and within our marketplace, and so I hope that remains going in 2020. I think it will.
Well, Kim, you know, it's complexity notwithstanding, and despite the fact that GovCon can be an extremely competitive environment, it is a $600 billion market with a customer that pretty reliably pays its bills, and that's hard to beat.
Absolutely, Rich. You got that right. So, hey, you know, we would love to hear from you guys. These are our emails. You know, if you'd like some additional information, again, some of those deep dives, just let us know. We also have several opportunities tomorrow. We're having a holiday party at the Unanet office, and then you get to hear Rich talk in more depth about the Gauge report and some of the lunch and learns, and learn about Unanet in the DMV area. And then we also have a lunch and learn with the Gauge presentation in San Diego. So, and if you'd like to get the Gauge report, here's where you can download it. And one other thing, you know, we're starting next week, we're starting the next Gauge report, we're starting the next survey. So I really hope that you'll participate, that you find this information great for helping you grow your business and look at your competition. And Rich and I, on behalf of Unanet, want to thank you for joining us. And by the way, we will answer all your questions. All right, thank you.